Thanks, Christy. So Renascor Resources, we're a Australian exploration and development company, and we made the move into the critical mineral space after we discovered and have now been developing what's turned into one of the world's largest graphite resources in our home state of South Australia. Our plan at Renascor is to produce not just a mine graphite product, but we want to lean on the technological engineering expertise of the Australian mining industry to move one step further and refine that into a high purity product that we can deliver directly to the lithium-ion battery industry. As a mining asset, we think we have one of the premier assets, not just in Australia, but in the world in the graphite space, with a competitive operating cost, capital intensity. But because we're located in Australia, we have both the mining infrastructure and the industrial infrastructure to allow us to move further downstream. And we think we're relatively unique in actually being more competitive by moving downstream and producing a refined product that we can sell into the anode sector. And we think it gives us a chance as ex-China markets start to develop and open up to become one of, if not the largest, producers of this product ex-China. A few words on the market. I think graphite is becoming a battery mineral, and we look to EV and lithium-ion battery growth for the future of the battery sector and of graphite in particular. One thing I wanted to call your attention to is where we are in the cycle. So we're at a relatively early point in the transition to electric vehicles, and I think you've seen some of these charts we show on the right of this slide. But I think we've passed the point of no return. That's certainly how we feel, that batteries themselves are becoming efficient. Those of us who have been going to these conferences for several years remember when we talked about the theoretical value of 100 US per ton kilowatt hour for batteries, that we've now blown through that. And this is the kind of growth that can outlast the political and commodity cycles we're seeing right now. And we're certainly seeing that. If we look at what happened in 2024, there were a lot of headwinds impacting the sector, and it certainly impacted the valuation of critical mineral companies like Renascor on a number of different fronts, whether it's inflation, which is decreased buying power, or some of the geopolitical uncertainty which has inhibited capital investment decisions. And again, this has really hit us in Australia. But then the prevailing theme, I think, is the Chinese domination. And the impact on this is it impacts the competitiveness of really any non-Chinese project. But despite all these headwinds, EV sales actually increased, uneven growth, but increased in 2024. And I think 2025 looks similar. So again, we've passed the point of no return. Now, what does this mean for graphite? Well, in graphite in particular, we're not only seeing Chinese domination, we're seeing near monopoly control by the Chinese. And so we're still looking at just less than 2/3 of all the electric vehicles are made ex-China, but they're almost 100% dependent on the Chinese now. And this is a problem, and this is the gap that we think we can fill. In particular with graphite, every different mineral has its own story for Chinese domination, it seems. With graphite, what the Chinese have done is they've really doubled down on their investments on synthetic graphite by investing in excess capacity. We don't think this is sustainable, nor do we think it's replicable outside of China. And we're already seeing the signs that it's starting to break in China. With Chinese suppliers are operating, I think most people in the sector would agree, relatively below cost. This has led to some noteworthy defaults from some of the major anode companies in China. And we've already seen the beginning of this year, the feedstock going up. But maybe more to the point, this isn't replicable outside of China. And that's largely based on the capital intensity and energy intensity of synthetic graphite production. So in 2024, not a good year for anode companies generally. The proportion of natural graphite anodes produced ex-China by the two main markets, South Korea and Japan, actually increased. So moving forward, we're expecting to see a significant increase in demand for natural flake anodes, in particular in the ex-China market. Price is holding us back right now. So in 2023, graphite prices were high, almost double what they are right now. And this would green light projects like ours. But since 2023, we've seen a gradual decline and then leveling off on prices. But in the meantime, we've seen graphite equities go down even further. And you can see from the chart here, you're sort of a breakaway where graphite prices are flattening or even increasing in some instances, but graphite equity prices start to go down. So to us, this looks like, have we reached the bottom of the cycle? Is this an opportunity for investors to come in? It is if the graphite prices return. So what's going to make the graphite prices return? Well, part of it depends on what the Chinese do. We have no control over that. The ex-China market is talking about public policy initiatives, whether it's out of the U.S. and some of the America First initiatives or tariffs coming out of the U.S. or EU. Could that create an ex-China price? Maybe. Could it also happen with China? China's talked about export restrictions on graphite before. Any of these changes could turn around the graphite price instantly. We could get very quickly back to where we were in 2023. The main players, though, aren't waiting for the market to change. They're moving ahead. And so if we consider the anode market, again, this is our target customer base, ex-China anode production. In 2024, 6 companies accounted for 97% of ex-China anode purchases. 6 companies. China, Japan, and Korea accounted for all of this, and they're already moving forward. So the legacy South Korean and Japanese suppliers are leveraging off their initial existing capacity to expand. And even some of the Chinese are moving offshore into Indonesia and Shanghai. And really the underlying driver of all of this is to create ex-China supply chains that are going to need the kind of graphite that we want to produce at Renascor. So a little bit about our project. Again, we're vertically integrated. And again, we try to illustrate with this cartoon what that means is basically we're going to have 2 operations. We'll have a mining operation, and then we'll have a secondary obligation that refines that. The mining operation is based on our Siviour graphite deposit. It's a large graphite deposit. It is the 2nd largest proven reserve of graphite globally, the largest reported reserve out of Africa. So it's a big graphite ore body. But in addition to being big, we think we can produce a material at amongst the lowest operating costs with amongst the lowest capital intensity of any graphite project outside of China. And we're development ready. We've cleared most of our major developmental hurdles. We have all of our regulatory approvals in place. We've completed a definitive feasibility study. We've acquired our land. And we have a strong cash position. We have over $100 million as of the end of 31 December 2024. We have $185 million conditional loan facility from the Australian government's critical mineral facility. We've actually moved beyond traditional FID work to move into more detailed engineering and long lead time procurement. But we think we offer more than simply being a mining operation by moving downstream. And by producing purified spherical graphite, it transforms Renascor into a vertically integrated battery materials company. And why does that matter? Well, for one thing, it gives us market access. Instead of selling our graphite to intermediate refiners, most of whom are in China, we can sell directly to big balance sheet bankable anode companies. We also think it gives us an opportunity to, again, utilize the Australian mining sector to deliver a better refining solution. And we think we have that in a purification technology that we've been working on for a number of years now. Finally, the vertical integration strategy also allows us to get better returns for Renascor, better returns for our shareholders. And again, we think this gives us an opportunity to become competitive. We can be amongst the lowest cost producers of a graphite flake at the mine. If we move further downstream, we think we have an opportunity to become amongst the lowest producers ex-China. What does that comparative advantage mean, and how does that work? Well, I guess we think that our vertical integrated model allows us to achieve a number of efficiencies. One is on feedstock. The single largest component cost in the production of purified spherical graphite is the graphite concentrate feedstock itself. If we can produce at our projected cost, that gives us an advantage. There's a logistical advantage by producing in-country. We'll be producing along the existing transport corridor, so we'll save money on logistics. We'll save money on transport material handling. Sovereign risk. Most of the lower cost graphite developments globally outside of China are in Africa. We have the benefit of being in Australia, which has both the mining base and the industrial base to allow for the greater investment in the downstream. And then finally, technology and engineering. So for about 5 years now, we've been trying to develop what we think is the most cost-competitive technology to purify graphite so we can deliver it to the anode sector. And we think we've done it. So the Chinese generally use hydrofluoric acid, which works quite well. We've been developing for a number of years an alternative technology that uses a caustic roast and sulfuric acid in a leach process. What we found is it's not very difficult to reach battery grade. In fact, you can do that in any different number of methods. The hard part is doing it efficiently. And so what we've been doing is we've been trying to engineer a good way to do that inexpensively, and we think we have it. By using this method, we think it's just more efficient in a first world environment because we avoid some of the high costs for transporting, for handling, for disposing of hydrofluoric acid. We recycle our reagents and we treat our processed water, and that leads to lower reagent costs, lower water consumption. We were recently granted a $5 million co-funded grant by the Australian government. We're building a demonstration facility. If we're successful with that, we think this gives us really another potential competitive advantage in just having a lower cost way to purify graphite. As we move through in the next couple of months, we're staying quite busy. We have an early contractor involvement that's maturing the engineering design. That will lead to a preferred EPC contractor. We've done a significant number of long lead time procurement items. Probably the biggest one is we are close to finalizing the connection of the electricity grid to the mine site. We're expecting to commission our demonstration facility later this year. We're also working on a very long process going through the approvals for our commercial scale downstream. We think we're relatively close to getting that as well. On the offtake and financing side, we have the conditional loan facility from the Australian government. And I guess our strategy on offtake is trying to work with the major anode companies. We have non-binding agreements in place with, amongst others, POSCO and Mitsubishi Chemical, who are two of the larger anode producers ex-China. We really think that the most economically viable solution ex-China to producing anodes is going to be a combination of companies like us who can produce the purified spherical graphite at a low cost with existing anode makers. And we think that's going to allow us to unlock the greatest value for the sector. As we move forward through the rest of the calendar year, we expect to be busy and have a number of material announcements on our ECI process, on the engineering. We think we're relatively close to getting our regulatory approvals on our downstream facility. We'll be commissioning that demonstration facility as well. Concurrently, we're working on trying to finalize binding offtake agreements with anode companies, and that would allow us then to move forward, secure financing and strategic partnership agreements, and then that gets to a final investment decision. So again, our plan at Renascor is to work as quickly as we can to accelerate both that upstream and downstream together. We think we're competitive on the upstream with anything outside of China. By moving one step further downstream, we think we can be even more competitive. Now, we don't expect to be able to compete with the Chinese on refining, but the way the market's going, we think that the competition is going to be everyone outside of China. And here we think we have an opportunity to do something that's even more competitive, and that'll allow us to grow into one of, if not the largest provider of this product globally. Thank you very much.